Well, with volatility spiking across markets overnight today, I want to delve deeper into keeping your cool while trading. To take us through his thoughts on stopping yourself from making bad decisions, Peter McGuire from XM joins me now live in the studio. Peter, thanks for joining me on The Trade this afternoon.
Lovely to be here, Kara.
All right, there's a lot of new entrants to the market when it comes to trading at the moment. Obviously, a big jump in retail traders. A lot of those retail traders have not seen this type of volatility yet. They have only seen the market go higher. Obviously, we saw a big fall in US equity markets overnight, some big swings in the FX markets. So just some initial advice to those newbie traders, what would you be saying?
I think a couple of things. Hold on to the wheel very tightly. Be conscious as far as what your stop losses are and what the instrument you're trading. Another thing that comes to mind is that a lot of traders, as we know, behaviourally, look for too much blue sky. In other words, as things become more present, that every trade seems to be materialising and doing well, your risk tolerance can sometimes go from 20 to 1 leverage to 30 to 50 to higher numbers. And so we've got to be conscious as far as that, because when you get big reversals, you can be taken out very, very quickly. And if you're not watching the market and you become maybe a bit of, laissez faire, then you can really do yourself some more harm than good.
So would you have profit levels in mind then before you go into a trade to set those limits, do you think?
I think you've got to do a number of things. I think when you set up a trade, you've got to have a book and a pen and a paper. I always say that we do about 28 hours a day of live TV to our customer base globally. And I do a breakfast show into Europe each day from 6 p.m. And so I make sure that if you're going to trade, have a pen, have a paper, and write down the fundamental, what you're thinking this trade is going to represent. Why are you entering it? And that's your journal. That's I think your Bible as a trader that needs to look back and reflect, why did I make that decision? And when you do come down to those simple analogies, right, I saw an opportunity to enter the market because there was a Fed announcement, or there was something happening as far as CPI, or there was whatever. Then there was a chance that due to the Bollinger Bands and due to moving averages and RSI, that really gave me an opportunity, and I thought that was the time to buy. Or was it seasonality, or a combination of them all with religious festivals, holiday seasons, and so on?
So let's talk about a real trade in play then. Obviously, Australian dollar popping above that 80-cent mark last night. A lot of Twitter activity calling that 80-cent mark. It hit it. And then what happened?
It got spanked
down.
Risk
off, straight back down below the 97 mark. It's trading around the 78.50. So that's 1.5 big figures a move in just a day, considering we were all looking for that higher Australian dollar. So how would you have played that trade? What sort of things would you need to think about when it comes to that type of volatility in FX markets, placing those stops and limits, and also the time difference? Obviously, that move happened while we were asleep.
Exactly. So that's the other thing, you need to be conscious. People say, we'll have gala events, and I say, what time of the day do you trade? And they say, I trade 24 hours a day. I say, well, that's great. Do you sleep? And there's the other side of it. Are you exhausted when you're making those decisions? So the first off is, if you saw that, and you were asleep, then it comes nearly to a point, there's more good luck than good management, because you put a stop and you say, well, if it hits 80, I'm out. And then all of a sudden, do you put a selling order in there and trade it from 80 downwards? It's easy to look back in reflection and say, that's what happened and I should have done that. But there are the inputs that need to be considered. Or when you do go to sleep, do you close your positions? Sometimes, there's a lot of times that if it's in an international market and it's volatile, you don't take those chances, because things can really work against you very, very quickly, or you have those specific stops there embedded in your decision-making process.
And you don't want to be watching the trade tick by tick, do you? That would just send you crazy.
Well, what also it does, see, we can even dig deeper into this. I've known people from Sydney and from Australia that have moved to the US, New York or Chicago, to trade the markets, or retail trader, because of time differentials. Because they can't be up at 11 o'clock at night, righto, I'm ready to go, I sleep all day. It really impacts your personal life, family life, and all of that, if that's what you're doing as far as trading. So there's the first step. The second step is, you need to know what you're wanting to achieve out of a trade, and whether trading is a second job or a third job, or if it's your number one source of income, and what your pool of money is, how much you're prepared, like a hedge fund, to actually have involved in a particular trade or a basket of trades.
So let's talk about particular trades versus basket then. If you're a newbie trader, do you think you should be looking at just one product? Do your research on one product? Or are you kind of in the camp that you should be diversifying and having a basket full of trades?
I think for the first month or two, look, the platforms allow you to actually trade very, very easily for a number of weeks or a number of months with no actual cash there. So they're all dummy trades. So that's not a bad way to start. When you're first kicking off, just have one market. See how it performs over a week or two. Focus on that. Maybe it's Japanese yen versus US dollar, or it's Aussie versus US dollar or gold or whatever. There's enough movement there to keep you centered and to understand what's going on. Then as your strategies develop and your confidence can develop, not overconfidence, but confidence, then you can start adding other markets. But I feel as though that another thing is to do some research as far as geopolitics, as far as what an economy represents, why the Japanese yen, or why do you trade crude oil, or why do you trade copper, and identify supply lines, production, demand pictures, and all of that, which in turn creates more interest in your own mind to say, oh, that could be a reason why that's moving up.
Are you a fundamental trader or a technical trader?
And seasonality. I try and combine the three. I know that's crazy, but I think I have to, because I want to know what's going on. If it's a religious festival or if it's Chinese New Year, then the time to trade long, traditionally commodities, is January. And then when you get back, it seems to be a little bit, they die down a little bit over that February, though we've seen a difference this year. This year is totally different to every other year, or last year was, and this year to the first 6 weeks or 7 weeks. So I try and combine them all for the sense of purpose that I want to know what's going on. I want to see the Bollinger Bands, I want to see the moving averages, I want to see the RSI, I want to see the behaviour of the market, the liquidity, the depth of it. Depends on the instrument I'm trading. If I'm trading an Aussie stock, then what's the open, what's happening, company announcements. If I'm trading commodities, I want to know, right, that time of the day is normally a better time to trade gold, or is that time of the day a better time to trade silver? They're the sort of things you need to do your own homework on.
Yeah, that liquidity is key, isn't it? Because it really depends what spread you're looking at in terms of that bid offer price.
Yep. Well, so you've spent so much time on the other side of which is market making, and that's where we're probably very similar in our backgrounds or what we do for a living. That truly, that understanding is vast and deep, and you're appreciating all of those moving parts that go into making a decision. And the retail trader doesn't have that same level of understanding, or they haven't spent their time in market, but they can truly, through education, at least if you can give yourself 3 to 4 hours a week, over a year you've put 200 hours of solid education in, and that in turn gives you a very strong, vast knowledge base, Kara, to I think make those valued decisions.
All right then, so volatility is back. What are you trading?
At the moment, I'm looking at US dollar, and then everything hinges off that, because US dollar tells me so much. What's happened? If it bounces to the upside, then Aussie comes off. Have a look at crude oil. I'm conscious as far as copper. I want to know what's the story with gold. I think that's been a very quiet trade. It's been volatile this month. Nothing to break out to the upside, and it's been spanked down a little bit. So I'm looking at US dollar. I look at all the currencies off that, and I'm very conscious from an oil perspective. 4 months, the market's up nearly 55, 60%. It's been one-way traffic. I'm not sure if there's so much more upside, so it could be a volatile time for March for that.
All right, Peter, thanks so much for your insights. Thanks for joining me. I'm sure we'll continue this conversation in weeks to come.
Thank you, Kara.